Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Tuesday, January 31st, 2017. I hope you guys' trades have been going well, and one of the things that we have been warning about, especially to our subscribers, is that we have a kill zone type move that is going to be pending, and I actually mentioned it to you last week on it. And just to really take some precautions, and I'll go over some other things throughout this video. So at Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. So we identify these irrational elements in market opportunities through Woody Dorsey's proprietary technical timing indicators and sentiment database. And through that, we're able to the technical timing indicators where Woody predicts when reversals are set to hit, and sometimes they're weeks and sometimes they're months in advance. So you're able to control your emotions as well as your portfolio. And sentiment is another thing that gets tracked, and he's Woody's one of the only ones in the world. He's one of a handful of people that actually tracks sentiment data and has been doing it for over 40 years. But sentiment extremes are always going to happen at reversals. You're always going to get the majority that are leaning either way too bullish or way too bearish as soon as the markets are going to reverse. So we have our technical timing indicators, we have sentiment, and then from there we just use regular technicals to try and pinpoint where the reversals may take place. So one of the things that we have been talking about has been the S&P getting up to the 2300 range, and we thought it may have ran out of time, but I've always left the door open that the Dow may get above 20,000 and the S&P at 2300. But it ran right into the technical time that we were expecting a reversal, and I just used that strength to build a short position, and I'm up on that trade right now. And you just really have to be calm and collective with your trades, especially it's not hard though when you know what to expect, and that's the fun part about it. So when everybody's in the thrill euphoria, nobody's looking down. Every analyst you get is pointing uh, higher, and usually that's the time that you want to be looking to take your longs off the table or build a short position. And once we get into the capitulation or the panic, you start closing out your short positions and you start looking to buy this dip. And these cycles repeat over and over. And this is how the institutions buy, and it's why they follow Woody, and they've been following him for 40 years. Is once they're in this area, they're unloading their long positions, building short positions, and then they're selling, they're closing their short positions and building long positions down here. So you have the opportunity as an individual investor to kind of get the same information that that institutions have been using. So here you can see what we mean. Now the high sentiment right away, we actually said that this is not going to produce your top. We're going to get a series of high sentiments, and they're mostly going to be after a spike high where people chase. And that's exactly what happened. But you can see everybody was bullish on this market up here. The moving averages here. So once everybody's bearish on the market, we're getting these reversals, and the extreme bullish readings, they're usually rounded tops. So here, you can see we have 1, 2, 3, 4, 5, 6 days of extreme bullish readings, and that's going from starting from December. So, but this is where you build the top, and we know when to expect the reversal, which is going to end up turning into a kill zone. And the important part about the kill zone is, this is the type of move you get. They seem like crashes. They happen really fast, but this is the end result afterwards. It works out to be a great buying opportunity. So here's just some pieces from our sentiment timing report. And what Woody has said is that, we have the best profits on the short side are made up during the kill zone. That's what we've been talking about. It's pending. That profile, and I can't give you these dates. You have to know when it is. It, when so that the profile is for when to expect a top. Though a top does seem like it's in place. So what it means is that the larger move to the downside, a lot of people just get washed out because they're waiting for the big breakdown. It doesn't come. Longs are jumping on, and before you know it, nobody's short, everybody's long, and then the rug gets pulled out. Well, we kind of know when that's going to be happening, but we do know that taking a long position up here is dangerous. And short positions, you just got to be a little bit quick until the kill zone hits, and that's when huge money is made. I know one of our testimonials, a guy bought some puts and made $40,000 in like 5 days on the position. That's where the big moves happen. So anyway, the interim diagnosis is the Trump rally has been due for transition into a rollover event that is going to come into a kill zone. So that is going to be a buy to dip opportunity. So you can see the kill zone is going to have the market dropping down. Everybody is going to get bearish on the market, and typically that's when you want to buy because the move that follows is just as fast. So there's a ton of money that can be made. But anyway, so we have a lot going on. We're in the time period that Woody has been calling for this all the way back in November. So this is something that we've been anticipating. People are positioning themselves, and now we're kind of, letting them see what to expect until the kill zone hits. So here's just our regular charts, and one of the reasons why I've been shorting in this area here was the wave count, where we have our 1, 2, 3, 4, and 5. I'm not an expert wave counter. I look for 5 waves when we're looking for a reversal. We're getting that. I took my first short position here. It looked like the good trade. They gapped up, and I took my second one at 22.99. So I'm averaging right around the 22.90 in that range, 22.88. And I'm just holding. I believe that there's a lot more downside to go, but they may come up and try and close this gap here. That is something that has been done often, just like every gap up into new highs has failed. And this is another reason why I took my short position. It's I think the last 8 times when it gaps up, the price has gone lower than the gap. And so once we got this, I was fine with just building the rest of my short position. And I think we're heading a lot lower. Now, there's 2 really opportunities here. One is the bears may push it all the way down to the 22.49 or the moving average, and then they come up and close the gap. But the thing is, we're not going to get that hard drop or the kill zone until it's ready, and that's why we're going to get this kind of choppy market, and you have to know what's going on. So either the bulls are going to head up, close this gap, or the bears are going to push it down and look for buyers to step in at the 22.49. So that's really all we have for tonight. We have the $74.99 for the first month, then it moves to $149.99. 12017 is the coupon code. And I'm still offering anybody that gets that signs up for the sentiment timing, you're going to get a free membership to my Markets Path. Send out email alerts, morning notes, what I'm doing with my trades. Either you follow or you don't, but this is on top of the sentiment timing subscription that you get both of them. So I believe this coupon ends in 3 days, so take advantage of it because we really want to be on the right side when the kill zone hits, and there's going to be a lot of money to be made. So with that, have a great night, and I'll talk to you guys next week.